Bank, and before that it was First National Bank. And the president would say, I'll make you a loan. Now you fill out an application online and it goes to Birmingham. That's the headquarters for Regions Bank. And so people start getting angry about it in the community, and a group of people get together and they start a community bank for the purpose of loaning to the local population. Okay? And then the community bank starts to grow, and a regional bank will come in and buy it. So the regional banks buy the community banks, and then the super regional banks buy the regional banks, and then the money center banks buy the super regional banks. And it cycles over and over again. All right. So they don't offer as much in the way of services, but it's much more personalized. And even now, I had a commercial lender come in from Simmons Bank, and they'll come back in and talk to you. And they'll tell you that Simmons has grown a lot in the last 5 or 6 years. They bought several other banks. And when you do that, again, the personal relationships start to thin out, and it becomes more formula-driven, document-driven, not handshake-driven. Okay? All right. They're banks that focus on large corporate and government customers. And so when you go to work in a bank, like if you're in a money center bank, they're going to have people that are wholesale bankers, and they're going to have people that are retail bankers. Okay? And so they do both, but they're different functions. And so you'll go through a management training program, and as you go through that program, everybody's trying to figure out where is the best place for you. Okay? And there are lots of different kinds of job opportunities in a bank, and you might end up being in accounting in a bank. The banks have a lot of compliance and a lot of accounting that has to be done, and so you might work in a bank and do no banking at all. You're an accountant for the bank. Or you might be in IT for the bank. Or you might be in compliance, which is making sure the banks understand the rules and stick to the rules and produce records. They fill out reports, make sure that they're sticking to the rules. So there's a lot of business. You might be in HR at a bank. A lot of jobs to be filled, a lot of benefits to be paid. And so there are a lot of jobs within banking that don't involve the actual banking part of it. But inside of the banking part, you have people that specialize and departments that specialize in making, multi-million dollar loans, and bankers that specialize in making a $300,000 mortgage loan or a $30,000 car loan. Okay. All right, mortgage bank. We've got a couple of them here in town. One of the newer ones, Moto Mortgage, owned by 2 Harding grads. Okay, and so when you are ready to buy a house, you contact a realtor. Most people contact realtors. Okay, and you might want to try to do it on your own, and people try to sell their house on their own, but honestly, it doesn't work very well. Okay, so you contact a realtor, and you meet with the realtor, and the realtor really needs to know maybe 2 things from you. One is, what kind of house are you looking for? What school district you want to be in? How many floors do you want? How many bedrooms do you want? Do you have kids? That kind of thing. What kind of house are you looking for? And then the second thing they need to know is, what can you afford? Okay? Because they're not going to go out immediately and start showing you $400,000 houses only to find out that the bank will only lend you enough to buy a $200,000 house. That is not a good use of time for anybody. So the realtors, part of their job is to understand who the lenders are out there and what the current rates and programs are. Okay? So they can take you to a bank here in Searcy, they might take you to Dina Powell at Simmons Bank. Okay, she is in charge of mortgage lending at Simmons Bank. That's all she does. And she goes out and she talks to realtors and says, hey, here are the programs we have, and I hope any customers that you get that are looking for a loan, that you will refer them to me. Or they can go to a mortgage bank, which is an independent firm that that basically is the marketing department, the sales department, if you will, for banks. Okay, so Moto Mortgage is over there, about a block down from Burger King, and it sits right next to Remax. Okay, so the guy who owns the Remax real estate franchise in Searcy also owns Moto Mortgage. He opened Remax first, and then after a couple of years, he opened up Moto. And so he tells all of the realtors at Remax, hey, give Moto a shot. Don't go to Dina Powell at Simmons. Go to Moto, and they will survey the 10 to 12 lenders that they represent. They're like an independent insurance agent, okay? A broker. They're not an agent, they're a broker. So they don't represent one company, they represent a number of lenders, and they look at what your needs are and what your financial circumstances are, and they say, listen, the best deal that we have right now for you, your circumstances, is from this company. It's this program from this company, okay? And that's what mortgage brokers and mortgage banks do, okay? Now, a mortgage broker doesn't have any funding whatsoever. They just represent other lenders. Mortgage banks do have funding. They may borrow from banks. They may borrow from investors to originate loans of their own, okay? And they are direct competitors of commercial banks. All right. Savings banks, you know, it's about this much of the total pie. Really not important. Limited purpose banks. Okay, so these things are set up, okay, for very narrow purposes. Okay, they're not broad. Somebody sees a need that's not being filled, and so they open up a bank to do one thing. Okay. Can you think of something in Arkansas that would be a good purpose for a limited purpose bank? I can. Something in Arkansas, maybe Mississippi, parts of Alabama. You know what they say about, let's see, what does a tornado and a divorce have in common in Arkansas? Somebody's going to lose a trailer. Riley, you get that, don't you? Okay. So it's a poke at Redneck, Arkansas. Mobile home lending. You know, you want to buy a mobile home. A mobile home is not a 30-year loan because it's not firmly attached to the ground. So a lot of banks won't touch them. You go into Dina Powell and say, I just bought a piece of land for $20,000 and I got a $125,000 mobile home, double wide, really nice. And she says, what do you want from me? That's not what I do. That's not the kind of real estate that we loan to. All right, fringe banks. All right, these are the more exotic type banks. Pawn shops, payday lenders. Man, you talk about seedy. This is seedy business. And rent-to-own furniture stores. Aaron rents. We have one block from here. All right? And so they are set up to do a number of things, but one of which is to make loans. And these are last resort type of lenders, where the interest you're going to pay is going to be through the roof. If you can't get a loan there, then you're going to be talking to the mafia. That's your last resort. All right. Virtual banks. Okay, we're seeing more and more of those. Okay. Capital One, Ally. Okay. They don't have a bunch of branches. You know, and if you're doing just normal day-to-day stuff, wow, you really don't need to go in to see somebody. Okay. Industrial banks, not many of them. Okay, they're banks owned by industrial companies, and there are not many of them. Utah and California, there are a couple in Utah and California. Again, it's small. I'm not going to ask you about industrial banks. All right, bankers' banks. And you will find a bankers' bank in virtually every state. Okay? And so what they do is they're typically formed by a number of community banks. So the community banks get together and they say, there's some services we need that we cannot afford individually. But if we group together and form a bankers bank, then we can afford it. Okay? So they do check clearing, securities trading, CDs, things like that are fairly costly, that if you want to offer those things, they're pretty costly if you go out and buy them retail. But if you get together and pool your money, then you can do it at a much lower cost. There used to be a really successful bankers bank in Little Rock. I don't know if it's still there. All right. What is an affiliated bank? That's just a bank that is owned by a holding company, and we'll go over the bank holding company setup. All right. Anybody asleep yet? I gave you fairly warning, didn't I?
You did.
All right. Think, David? Are you beside yourself with excitement?
Yes.
It's just difficult to keep it in. All right. Listen, if I start nodding off while I'm lecturing, you know, somebody come up here and just. All right. Can you imagine taking this class and having? We had a guy that taught this class. He was a banker. He was in the compliance department, and. He taught it from 6 to 9 on Monday nights. And every now and then I'd be at my office and I'd walk by the class and I'd look in. It was awful. It was an awful scene. All right, state and national banks. All right. So if you want to create a bank is a private business, unless you're a central bank. And central banks are semi-private businesses. All right, you have to apply for a charter. Some government body has to approve of you opening a bank. You cannot just say, hey world, here's our sign, we're open for business. That's not how it works. Okay? And so you either apply with the state or with the federal government. Okay? All right. So by far the biggest insurance company for banks is the Federal Deposit Insurance Corporation, the FDIC, created after the banking crisis of '29. Okay? All right. Now you will see, and this was kind of an eye-opener for me, this tells you what a nerd I am that I even paid attention to this. When banks advertise on television, one of the last things they say in small print is member FDIC. Okay? That means they're insured by the FDIC. But technically, a member bank is not a member of the FDIC. They're a member of the Federal Reserve. Any of you taken money in capital markets? Okay, so you studied the Federal Reserve, right? we'll take another look at it. And we talk about it a little bit in Manfin. I know, David, you didn't enjoy studying about it in Money and Cap, and you won't enjoy studying about it here. All right. All right. So, one unique attribute of a bank is it offers deposits. I was watching a movie the other night, and it was from the 1930s, starring Johnny Depp, and he was John Dillinger. What did John Dillinger do to make a living? He robbed banks, you know? And when you look at the old westerns, people robbed banks. So someone was once asked, the bank robber was once asked, why do you rob banks? Remember what he said? It was famous what he said. Well, that's where all the money is. All right? That's the truth. That's what he said. All right. All right. So you offer deposits that are subject to withdrawal on demand, otherwise called demand deposits. You put your money there, and you can get it out anytime you want, otherwise known as checking accounts. Boy, that was a big deal. Checking accounts. Okay. So banks take in deposits, and they make loans. They make loans. Okay. So a bank has an obligation to make loans. Okay. When they are given their charter, their approval, the government that issues the charter gives them a responsibility to help develop the economy, the commerce of that area. You are in business to make money, but you are in business to make loans. Okay? All right. So Congress has also defined bank. So we're still going over what is a bank, okay? As any institution that can qualify for a deposit insurance. So you have to fill out an application, submit it to the FDIC, and they have certain requirements to determine if they're going to provide insurance to you. And if you pass that process, then you're a bank. All right. All right, this is a biggie. This is people get all bunched up over who they're going to regulate. And so when you're working at a bank or you own a bank, which government agency regulates you? Okay, so who are they? Who are the agencies? And again, there are job opportunities here. The Federal Deposit Insurance Corporation regulates banks. Okay, they regulate all state chartered banks. Credit Union Association. Whoops. We're missing some regulators in here, but we'll get to those. Oh, this is all about insurance. I'm sorry, not regulators, but insurance. The FDIC is like 94, 95% of the market. These other insurance firms are tiny. They're tiny. All right. So what does the financial system do? Really important. So we have a system of commerce where things are made, but we also have a financial system that allows for payments to be made, okay? So the primary purpose of the financial system is to encourage saving and to transfer those savings to individuals and to institutions that need the credit, okay? So you should remember from your macroeconomics courses that savings equals investment. That's why it's so important for people to save. And that's one thing that the developing countries, in particular China, has done a great job. The Chinese people save a lot. Okay? And those savings go back into the economy in the form of investment. And it's from investment that jobs are created and innovation happens. Okay? So saving is really important. Savings equals investing. Okay. And so this process of moving money back and forth between people who save money and people who need money is called financial intermediation. Okay. So banks stand between the savers and the, so you have the savers, and they have a supply of capital, and you have business and government, and they are the users or demand for capital. And then you have banks that are between them. Okay? All right. So it's a very important role in the economy to have a good, efficient, honest banking system. It's how the economy grows, how jobs are created, and how living standards are improved. Again, the process of figuring out how to serve a need better is what lifts the standard of living for everybody. That's why we don't live in the Stone Age anymore. Okay? Do y'all watch Star Trek? Anybody watch Star Trek? No? Too old for you? There was one of the Star Trek movies, the guy who created warp speed was asked why he created warp speed. And he said, why does anybody create anything? To make money, he said. And of course, by that point in time, the people from Star Trek, they'd gone back in time and they said, oh no, we don't work for that anymore. We work for the betterment of mankind. So isn't that wonderful? And I will tell you, I pray for the day that actually happens. Okay? Where we all lock arms and we work to help each other. And that's the only reason we work, because all of our needs are met whether we work or not. And so we're just out there working to help each other. But it's in a lot of the science fiction movies, they make political statements like that. And that's a very political statement. Jean-Luc Picard said, in our time, we no longer work to make money. We work for the betterment of mankind. Whereas the guy who created warp speed was in our time, and he said, why does anybody work? Well, to make money, to have a better life. I mean, we'll see if we get there. Okay, supporting services that are provided by financial institutions. Okay, payment services. All right, and that's making sure that money switches hands. Credit and debit card payments switch hands.